Total inventory levels in Edmonton are up over 25% in the last year. Plus, I noticed the prices for apartment condos appear to be dropping rapidly, but there's more to it than that. I've got a whole bunch of other stuff for you here, but we're going to be going into the Edmonton housing market update for August 2025. We'll look at each market segment, including the market as a whole, detached homes, townhouses, and apartments. So let's jump right into it. All right, so let's start by looking at the market as a whole. So this includes pretty much everything in Edmonton mushed together. We were sitting at an absorption rate of 36.51%. So that's a balanced market, leaning a little bit closer to the buyer side, but still relatively balanced. That's been dropping steadily since March, when it peaked at 50% when it was on the cusp of a seller's market. It's been dropping a few percent each month, went to 47, then 42, then 39, now it's at 36. So the balance has been shifting over the last 4 or 5 months for sure. And the reason this is important, this absorption rate, another way of looking at it is what's called months of inventory. It's basically the balance between active listings and solds. So if we get a lot more listings, but sales stay the same, then basically the balance is still gonna shift. We're gonna have a lower absorption rate in that case. And that's how you can move from a seller's to a balanced to eventually a buyer's market. Now, the average price for all of Edmonton was sitting at $432,032. That's down slightly from last month, but it's moved around a few times in the last few months here. We'll be looking at the benchmark pricing, which I prefer a lot more than the average prices. But if we're taking just averages for the year, in 2025, the average price sitting at $433,245. So it's up 6.34% for the year so far. In 2024, it had been up 7.89% for the year. Now, the number of active and sold listings in total at the end of July, there was 5,317 active listings, and there have been 1,941 sales. So listings have bumped up 5.79% from June. But if you look at the year over year number, that's what I talked about at the beginning of the video, it's up 25.02% from July 2024. So that's a pretty big difference in 1 year. But the monthly change is not like drastic, but still seeing over a 5% swing each month. If you have that several months in a row, it can start to make a pretty big difference. Now, the number of sales are pretty steady with June. So they're down 1.67% from June. So not a big drop there. So the main thing changing the balance has been the bump in listings, and year over year sales are down 3.38%. So the demand side has not changed very much, but the supply side in terms of number of new listings and active listings has. If you look here, the 13-month history, you can see just sort of the balance, the number of active listings shift as well. So right now with us sitting at over 5,300 active listings, that's quite a bit different than how it felt in March when we had 3,400. Right? And then it was 3,900 in April, 4,800 in May, just over 5,000 in June, and now we're at 5,300. So they've been creeping up, giving buyers more options overall. It's gonna feel a little bit different depending on what market segment you're in, but this is just looking at the totals for all the market segments. Average days on market was sitting at 34 days versus 32 days last month. So it's taking a couple days longer on average to sell your property. And it was 33 days last year. So not a huge difference either way. Now, market distribution, this is actually just what price ranges are properties actually selling in. And you can see 14.1% under 200,000, 15.1% between 2 and 300K, 16.9 between 3 and 400K, 22.4 biggest segment between 4 and 500K, and then 15.4 between 5 and 600K, 7.6% between 6 and 700K, and 3.5% between 7 and 800K. After that, pretty small segments of the market with 1.8% between 8 and 900K and 0.93% between 900K and $1 million. After that, it's pretty small percentages. Now, what we'll look at for the home price index on this segment is the composite. So again, it's sort of like what's the most typical home in all of Edmonton. And there's been some interesting price changes on the home price index. So you can see in July 2025, it dropped to 413,400, when in June it was at 427,300. Over $10,000 drop there. Like I think that's about 14,000 just in the last month in the home price index. So definitely seeing a pretty big shift in pricing over the course of 1 month. You can see that the prices had been going up since December 2024 when they were at 392. Then they kind of peaked in, it was either June or April. It looked like it was like April and then down slightly, and then June looked like the same as April. It went up from December until April to June and then dropped down to 413. You can see that we're still above the peak last year in June 2024 at 399,400. And there wasn't actually much of a drop between the peak in 2024 2024 and the bottom in 2024. So the peak was $399 and then went to $392 in December. So that's only like a $7,000 drop, whereas just in the last month, we've seen a $14,000 or $13,000 drop. Definitely seeing some shift there. My guess is one of the biggest impacts is that interest rates actually went up. They went up probably about 0.5% over the last month and a half or so, something like that. And that starts to eat into people's buying power and very quickly affects how much they're willing to spend on their mortgage if they didn't have it locked in. We'll take a look at the rest of the market, but that's what we see for the composite. Going into detached homes next. But before we do that, I did want to let you know, I am a real estate agent here in Edmonton with REALBroker, and I'd love to help you buy or sell a home. And the best way to get started with that is to book a free strategy call. So if you go to booktrevornow.com, you can just select a 30-minute time on my calendar, book it in, we'll hop on a call and take a pretty casual consultation with you, help you any way you want, any way you need, and hopefully you end up becoming a client later, but if not, not a big deal. But that's the best way to get started if you want to connect with me, or you can always shoot me a text or email me, 780-819-5508, and my email is trevor@trevortardif.com. Okay, so let's keep going. Detached homes. Now these are a little bit different. It's still a balanced market at 37.1% absorption rate, pretty close to being right in the middle of a balanced market. But again, it's still following that same sort of trend in that the absorption rate's been dropping since March, when it kind of peaked for the year, close to 50%. So this follows the total composite pretty closely so far. Average price for a detached home was sitting at $569,500, was up 1.31% from last month. On average for the year, detached homes are up 7.61%, and in 2024, they were up 8.87% by the end of the year. Now, if we look at actives and solds, you can see there was 2,733 active listings and 1,014 sales. So the actives are also up. They're up 3.52% from June, not up as much as the market as a whole, which was 5.7 or something. And you can see the inventory is up 21.2% from July of last year. So again, not quite as much of a jump, but still a pretty big jump over the course of the year. Sales are down just a little bit, down 1.36% from June and down 3.52% from July. So same kind of story as what we saw in the other segment. Average days on market was sitting at 30 days. It was 29 days last month and it was 31 days same time last year. So for the ones that are actually selling, not seeing huge swings in the days on market. Unless you look at the colder months, you can see that November, December, January are the longest, 42, 44, 50 days on market. So things move a little slower at that time of year. Market distribution, somehow there's a few people that got detached homes under 200K, 0.91% of the market, 2.7% between 2 and 300K, 12.15% between 3 and 400K, and then the biggest segment was 4 to 500K with 28.6% of the market. Also 26.3% of the market between 5 and 600K, and 13.8% between 6 and 700K, and 6.5% between 7 and 800K. After that, 8 to 900K, 3.4% of the market, 9 to million, 1.7% of the market, and 2.7% between 1 and 1.5 million. Now for detached homes, we have two different home price indexes that we can look at. We can look at both one-story home price index data and two-story. So we will start with the one-story. This one you can see in July 2025, the home price index was sitting at $454,400. So that was also down from June when it was at $466,400. So down about another 10, 11,000, 12,000. So same kind of trend as what we saw with the market as a whole. You can see that we peaked probably in April is when we had the peak for the year, but it had been going up since October when it was sitting at $409,100. Again, from the peak to the bottom last year went from $419 to $409. So it was a $10,000 drop, but we're seeing a $10,000 drop just in 1 month right now. Seeing a bigger swing so far than what we got last year in the same time frame, but it's only 1 month, so you can't take too much away from that. Again, I'd be tempted to say the interest rate changes were a big part of that. Now looking at the two-story, this one's actually completely different. You can see the benchmark price was sitting at $571,500, and it's up from last month. The one-stories seem to have peaked and came down a bit, but the two-story prices based on benchmark prices have still been going up. So it's been going up since December when it was at $517,000. So it's had a pretty good run for the year. And if you compare that to the swing again last year, it peaked at $525 in June 2024, and it only went down 8 grand between June and the bottom in December. 2 stories are definitely looking different than the 1 stories so far, but time will tell how this continues to play out as we get into the fall months. Now, going back to our other stats, we're gonna look at semi-detached. So this is basically half duplexes. It's a pretty small market, but a lot of people still interested in this market. It's in 42.58% absorption rate. It's balanced still, but actually leaning slightly more towards the seller side. It has been dropping. Back in April, it was at 64%, so it was a pretty strong seller's market then. In January, it was at a whopping 70%, and August last year was at 83%. So we've had several periods in the last year where it was a seller's market or a strong seller's market for half duplexes, but that has been following a similar trend where that absorption rate has been dropping in the last 3 or 4 months. Average price for half duplex was sitting at $431,394. It's down 3.63% from last month. In 2025, on average, they're up 5.56%. In 2024, they gained 9.07% on average. Now, actives in sales, there was 472 active half duplexes at the end of the month, and there had been 201 sales. So the active listings are up 14.56% just in the last month, so that's a pretty significant shift, and up 56.29% from July last year. So inventory was very low last year, so big swing. It's not totally unusual to see that big of a swing in a market like this because it's small. We're talking about less than 500 active listings, whereas for detached homes, I think it was like 2,700 or something like that. So if you get an extra 50 added or 50 new ones built or whatever, it makes a bigger difference in the market balance versus if it was a bigger market that it was happening in. The sales are down just slightly from last month, down 2.43%, and up 1.01% from July last year. Probably because there was such low inventory last year, there was just some sales that couldn't happen. So it's not surprising to see that those are up slightly compared to the other segments. Average days on market sitting at 29 versus 28 last month and 26 same time last year. So pretty low overall. 0.53% of the market under 200K, 6.7 between 2 and 300K, 26.7 between 3 and 400K, and then 47.2 between 4 and 500K. And it kind of drops off a cliff. You got 13.2% between 5 and 600K and 4.05% between 6 and 700K. Just over 1% between 7 and 800K and less than 0.5% in all the segments after that. Unfortunately, we do not have enough data on half duplexes to have a home price index data for that. So we will go to the next segment, which is row/townhouses. For most of these is going to be like your typical condo townhouse, but it also includes residential attached properties. These are sitting at an absorption rate of 46.51%. So again, technically balanced, but still pretty close to seller's market. This has also been dropping in the last few months because just only a few months ago in May, it was sitting at 67% absorption rate. So that was still a seller's market. But the last 2 months, that balance has shifted. In the last 13 months, it's been a seller's market for almost half the time. So about 6 out of the 13 months, yeah, but almost half the time it's been in seller's market territory. But the last couple months, it's dropped a bit. Average price was sitting at $289,537. That's down 3.36% from last month. So far for the year, they're up 5.83% on average. Last year, they were up a whopping 11.54%. And if we look at actives and sales, there were 673 active listings at the end of July, and there was 313 sales. So the listings are up 13.68% from last month. So pretty significant change in 1 month, and up 37.91% from July last year. So I was talking about the market as a whole having 25% more inventory compared to last year, but townhouses, there's 37, almost 38% more inventory than the same time last year. Although the market was crazy hot last year, inventory was really low. And since sales are only down, what, 2.19% from last year, it's not like demand's dropping off a cliff or anything. There's just more product coming to market, more people willing to sell, probably because they like the prices, that kind of thing. So that's kind of the main thing that's shifted the balance in that market. Pretty steady demand. It's down just over 5% from last month, but over the course of the year, the demand for townhouses remained high, which is impressive considering how much the prices have actually gone up in the last 2 years. Average days on market was sitting at 29 versus 28 last month and 31 same time last year. Under 200,000, you got 15.2% of the market. 2 to 300K, you got 34.4% of the market, and 35.7% between 3 and 400K, and almost 13% between 4 and 500K. After that, almost nothing with 1.3% between 5 and 600K and 0.3% between 6 and 700K. So let's look at the benchmark prices for townhouses. This one is a little interesting. So in July 2025, the benchmark price for townhouses was sitting at $283,800, which again looked like a pretty decent drop from last month. It peaked in March this year, so it actually peaked pretty early at 300,000. It had gone from 262,000 to 300,000 just between December and March. Got off to a really good start, went up almost 40K in the matter of 3 months, and then now it's scaled back, you know, about 16,000 of that 40, or I think it was up 30K, 38K, and now it's come back 16K since March. A lot of that was probably driven by tight inventory initially, and then a lot more stuff coming to market later. So that obviously lost some steam in the price growth. I also wanted to just show you what happened just over the course of the year from December 2023 to December 2024. You can see it went from about 230,000 to 262. It was up about 32K? Yeah, it was up about 32K over the course of a year there without it ever actually dropping really from December 2023 to December 2024. It was still just kind of going sideways and up slightly in the fall and winter months last year. Then, like I said, it just kind of went nuts between December and March, and it's been scaling back a little bit since then. That market's rebalancing. You can tell that there's definitely been some pullback on the buyer's side. Maybe some of those prices were just starting to get a little bit too high for people to feel like it was worth it. And now, you know, prices have had to adjust a little bit for townhouses. All right, now let's look at apartments. So apartment condominiums, they're sitting at an absorption rate of 27.17%. Buyer's market almost made it up to balanced market territory, but never quite does. It did in March for, you know, a couple percentage points, but it's been a weak buyer's market for most of the year. Not like a super strong buyer's market, but a weak buyer's market. So buyers are still kind of calling the shots, but we haven't been seeing it just like a bloodbath or anything like that. Mostly because sellers are just not willing to sell their apartment any lower than a certain amount, right? Like they hit a bottom and then that's where they're at. Average price was sitting at $202,823. That's down just over 4% from last month. But for the year, 2025, they're up on average 6.87%. And in 2024, they were up 6.65%. There's gonna be something interesting in the benchmark price I'll show you in a bit here. Now, active and solds. There was 1,520 active listings at the end of July, and there was 413 sales. So active listings were up just 0.53% from June, and up 9.12% from July 2024. That's actually a lot different than all the other market segments. The market as a whole was up 25%. I think it was detached homes. Oh yeah, no, detached homes were up 21%. But, you know, so apartments, even though they've been a buyer's market, they're not seeing a big increase in that inventory level. And that kind of makes sense if you think about it from the perspective that a lot of people aren't willing to sell their properties until the price gets to a certain point. So those other market segments have seen some gains, and all of a sudden that brings some more sellers out of the woodworks, whereas apartments have not seen the same kind of gains. So, you know, we're not bringing as many of those sellers out of the woodwork. The sales were up 0.73% from June and down 7.81% from July. I think that's actually lower than most of the other segments. Average days on market was sitting at 47 days versus 43 days in June and 44 days the same time last year. Under 200K is the biggest segment of the market with 53.55% of the market. 2 to 300K is 34.71% of the market, and 3 to 400K is 8.36% of the market. Then you got 1.58% between 4 and 500K and 0.93% between 5 and 600K. Now, if we hop on over to the home price index, if you've been watching my videos for the last several months, I've been a little confused about what the heck has been going on with the home price index for apartments, because it just kept going up. Meanwhile, on the ground, when I'm looking at either having people buy apartments or having people sell it, I don't know why the home price index keeps showing gains, because it definitely doesn't feel like you're actually getting gains. And it's kind of looking to me that like that got corrected, because from June 2025 to July 2025, it went from, I think it was almost 219 or 218,000, almost 220,000 to under 200,000. So just like this massive drop in the last month, and it came down to 199,500. So now we're already within about 5,000 away from the peak of last year in June 2024 when it was at 194,100. So I don't know, maybe they didn't have enough data or something, but I don't really think there was actually a big shift in the apartment condo market between June and July. I just think like for several months before that, for whatever reason, their data was just off, or maybe they didn't have enough sales, or the ones they used were kind of wacky and didn't fit with the rest, but I'm more in belief with this because that's showing not much of a difference at all in terms of pricing from June of last year, you know, up 5,000. Like that's not gonna make or break anything. Not up that much, not even up 10,000 from the lows in November. This actually seems like a more accurate number to me, even though this chart makes it look like it's falling off a cliff, but it wasn't making any sense before that is all I can really say. So feels slightly vindicated, but also less crazy. So yeah, that's kind of where I'm at with the apartments. And yeah, so we're now going into the August market. Things are usually a little bit slower in August. A lot of people are on vacation, a lot of agents are on vacation, but it's still steady, usually still pretty busy going into September, October. Things are really gonna start to slow down by end of October going into November, but usually the fall market's still pretty busy. We haven't seen big drops in sales. The biggest changes we've been seeing are the number of listings, and that can really just start to shake up the feel of the market, but demand is still there. Hope you guys got value out of this market update. Leave me a comment below and I'll see you on the next video. Thanks for watching.